I'm back, and it's time for me to explain to you exactly what happened today. If you're confused by all the insanity, there was a lot to take in. But first, from yesterday's video, if you watched it, well, first of all, thanks for watching. If you watched it, that means you know why the price of GameStop soared so much on Wednesday. And the same can be said of Nokia and American Airlines, Best Buy, AMC during the week. If you missed that video, click on the link in the above corner. It should be right there in the above corner, and watch that first. Get a little bit of knowledge and understanding, and then you can listen to this. Because we entered a new trading session today, and futures, you know, they were pointing to a market slide, but not because of short selling, but because of poor outlooks from Apple and Facebook for the year 2021. Listen, when big tech says it's going to be a big bad year, stocks are not going to get off to a good start. That's common sense. And then suddenly, as the opening bell was about to ring, as the battle between the buyers and the short sellers was about to kick off, news broke. Investors using the Robinhood trading app, and other apps as well, but we're just focused on Robinhood. Investors using Robinhood that heavily shorted stocks like GameStop, AMC, and Nokia, all of which were spiking in recent days, were no longer available to trade. Like, if you search for them on Robinhood, nothing showed up. They were also excluded from the app's news feeds. Like, you couldn't find anything on it. And let me tell you something, that's got to be a horrible feeling. If you put your money into a particular stock and you use this particular platform and you want to see what your money is today, the next day, and you want to do some action, and then suddenly you get a blank screen, that's got to feel horrible. Because, quite frankly, Robinhood removed the ability of its everyday retail investors to buy in order to save institutional big firms that were shorting. They really did that because the average investor that followed the lead of those public chat rooms, you know, the subreddits, that same person who made some good money that jumped in along with the countless others suddenly became handcuffed, couldn't do anything. Even worse, there were people who jumped in very late yesterday, putting money at a high price, thinking that prices were going to rise some more. You know, they put the money in and they said, we're going to go along for the ride. You know, we're going to manage this. They waited. They turned on the TV, the internet, their phones ready to go, and they saw, oh wow, futures are saying that GameStop is falling. But you know what? It can go higher. We can manage this. We're going to buy. We're going to send it higher. We got this. We did it before. You know, those big firm short sellers, they don't have all the power. And then you see that GameStop's down 10%. You go to your phone and you say, okay, I got to buy. You can't buy. You look up. You look at, we look at your phone. If there's anything on your phone, it's down 25%. You can't buy. It's down 50%. You can't buy. It's down 66% at one point. I remember seeing that. And I thought about those individuals that couldn't even execute a buy order to prop up the price. Now, those people that could sell, but you kind of understand what one-side selling does, right? If everybody's selling and you can't buy, and the people trying to buy because they sold are trying to buy it at a low price, this ain't going nowhere, and this is just going to keep going down, right? The price continues to lower because there's no buy orders allowed to be executed, and the price drop continued. So the retail investors, the mom and pops, and the average Joes and Janes, they all started panicking. They went to the public forums to see if they could go onto other trading platforms. You know, some of them, they were completely shut out from those platforms. Some didn't have enough money to open up another account. Some logged on to another platform only to see the same blank screen and no buy button. And even more suspicious, some of those chat rooms where people gathered to speak about trading, they were gone, vanished, even privatized, which means they had no access to converse with the people they just talked to yesterday. That's very interesting. And this unfortunately lasted all session long, 9:30 in the morning, a little bit earlier, to 4 p.m. Eastern, the trading day. And what was the result? GameStop was down 44.29%. AMC down 56.63%, and Nokia down 28.4%. Now, I'm going to get this off my chest today because this is going to be my own opinion based on everything that happened today, so we can insert a disclaimer right here. What happened today from some of these brokerages and these trading platforms was just wrong. By definition, it was wrong. It does not resemble a free market by definition. It's the opposite of capitalism, and I'm a capitalist. And those responsible for preventing the average person from buying more of the stock that they already own while they're watching the value of their shares plummet right in front of their eyes, powerless to prop up shares they already purchased. Well, to be real, to be a New Yorker, and to be kind, Nah, son, that shit cool. It's messed up. For real. And someone really needs to be held accountable. And just to put a little bit of icing on that crap sandwich, if you want to see what Robinhood said just a few days ago to what they said today, man, you're going to be either pissed off or hysterically laughing at the insanity. Robinhood on January 5th said this: "The world's stock markets are complex, but are all based upon one simple concept: connecting stock buyers with stock sellers to trade under an agreed upon set of rules. This is the key role of every stock market from New York to Hong Kong." That is until they decide to change the rules, which is what they did today. Take a look at this post. "In light of current market volatility, we are restricting transactions for certain securities to position closing only, including shares of AMC and GameStop." Yes, buyers and sellers should trade according to an agreed upon set of rules that they can change at any moment. Isn't that crazy? Now, Congress, they already said today that they're going to hold a hearing on the GameStop trading and stock market insanity, which, quite frankly, they most likely don't understand. And I'm just saying that because if you remember the hearings on big tech, that was a big bust. Not really the best track record. It's the truth. Listen, I could be wrong, but I'll push that to the side. Hopefully, justice is served. But I can tell you guys something that everyone should learn from this saga. It's very important. If you're going to put your money into something, do some research before throwing it in. Because Robinhood is not really the best app for trading. And if you used Robinhood, you might be a little upset. You know why? Because of this. Robinhood is not FDIC insured. Oh no! Do you know what that means? Well, Robinhood states in its disclosures that it's covered by the Securities Investor Protection Corporation, or the SIPC, which is a nonprofit member corporation. Banks, on the other hand, they're covered by the FDIC, the Federal Deposit Insurance Corporation. And this distinction between both could make a very big difference in how much you get back if something were to happen to the financial institution in which you are invested. Nobody's really talking about this, but it'll come to light soon. You ready? If your bank is covered by the FDIC, that means your money is insured for up to $250,000 per depositor. And if you have money parked with another financial institution covered by the FDIC, you too covered for up to $250,000. That means if the financial institution you're banking with fails, you're going to get all your money back. If the bank fails, you're going to get refunded dollar for dollar the money you put in. No questions asked. Plus the interest up to the date the institution went bankrupt, when it went under. On the other hand, if your institution is a SIPC member, you don't get the same level of coverage. If something happens to your brokerage firm, you're covered for up to $500,000 with a $250,000 limit for cash. Now, you hear those numbers, 500,000, that's a great idea. That doesn't sound bad. The catch is there's lots of limitations. This is why you should always read the fine print. SIPC protection is not the same as the FDIC because SIPC does not protect the value of any security. It said so right on its website. The SIPC will not protect you if the value of your securities declines. It also will not protect you if you were sold worthless investments. The SIPC will not protect you if you received bad advice. And the SIPC will not protect you if you were steered towards investments that are inappropriate for you. Think about that language. Maybe, and just maybe, I might be jumping the gun here, that may be the reason why all these social media sites and chat rooms and subreddits and groups, they're all closed and under investigation because, if you think about it, there were a lot of people openly receiving and acting on what one could perceive as bad advice. There were also a lot of comments that could have steered someone towards investments that were inappropriate for you. Think about that. Look at that language. So many possible limitations that could be applied that would make you exempt from protection. All because you signed the dotted line with Robinhood and didn't read the fine print. You didn't do your research. Uh-oh. Hopefully that doesn't happen. And let's just say Robinhood folds. Let's say Robinhood goes bankrupt. It's not a bank. You know, there are banks that are forced to quit. And the good news, when a bank closes, those investors, due to FDIC insurance, they're going to get their money back, dollar for dollar, with interest. But if Robinhood closes, or any account closes that's SIPC covered, investors may only get just a percentage of their money back due to those limitations, which are so open-ended. And they could also be subject to like a really long court process as the company dissolves. And listen, any company that files for bankruptcy or is going under means that they don't have any money. They can't continue to operate. So as that company dissolves, what are you going to get? A long wait, possibly some court dates, and a lot less than you likely put in. Listen, what happened today was wrong, and this will go on to the federal courts, and I hope that justice is served, but again, the track record speaks for itself. Expect hefty fines and more regulation, whatever that means. I'm not going to open up that Pandora's box. But listen, two major points to take away from today. If people are banned or censored from trading and or gathering to discuss GameStop or trading other stocks, eventually you're going to have to ban the sale of every single stock, you know? Listen, the short selling positions by large firms, they're public knowledge. They're transparent. It's on various websites. You could see it. It's open information. Are we going to ban that too? Are we going to ban the Wall Street power lunch where people get together and discuss trades? What about roundtables? Roundtables. We here at Modern Wall Street, we used to host a bunch of them over at Delmonico's before the city shut down. And what, we're going to ban every chat room because they're planning to move stocks in one direction? Are we going to have to ban stock twits and Twitter because people are discussing one stock in particular and they're discussing a possible move into it or a move out of it through E-Trade or TD or Robinhood if they're still around? That's a very fine line to walk. I don't know if that would be legal. Is it? Well, on the other hand, and this is the other major point, and this is really important. Before you put your money into a brokerage or a bank or an online gambling site, sports site, know what you're getting yourself into. Look it up or ask about the security of your money. It's your money. You worked hard for it. You deserve it. Don't just jump in blind and say, here, take it. I'm all in blind. Just like in poker. Now, going all in blind can work, but truthfully, 99.9% of the time, you're just a blind fool, risking it all without looking at what's right in front of you. Take it. Fool. Stupid. Well, I really hope you learned something today. Actually, I have a funny feeling a lot of you just learned something today, and I expect this video to be shared a lot as well because that's just facts. I'm throwing facts at you. No BS. I did all the research. Here's the deal. Simple, straight and to the point. Easy to understand, I hope. I hope it helped you guys. I'm tired. I need some sleep. I got another day of work ahead of me. I'm out. Until next time, from Modern Wall Street, I'm James Swinney.